This is why the US dollar will be the dominant force this week. First on the list is the euro versus the US dollar. Now, on the 4-hour time frame, if I zoom out a little bit, you can see that the price made a higher high here or equal high, followed by negative divergences on the RSI. That forced the price to break below this upward trend line and make a new low last Monday. From that point onwards, and during the non-farm payrolls, the euro was declining. From this point, we can draw a channel connecting these swing highs. And what we see is that the last Friday's low is exactly at the return line. So we do expect the sellers to step in and resume the downtrend. From where they can do that, so we can draw a Fibonacci from this swing high to that swing low, around 61.8% and 50% retracement. We can expect the sellers. Now, this level, especially the 61.8, is considered as significant because it aligns perfectly with the broken swing low that can act now as a new resistance. Also, it's just below the downward trend line. If the price reach this level and decline, then the next key level of support will be definitely anywhere between the return line or the last week's support. If the price drops further, then the next key level of support will be this one here. We had similar situation on the sterling versus the US dollar, but last Tuesday the price made a higher high, which at the end ended as a false breakout. That combined with divergences of B class because the RSI made equal highs. From that point the price declined but didn't make a lower low. The price right now sits at the recent swing low, and the only case for this market to move downwards is at the break and a continuation to the downside. Until then, we cannot assume that the sellers will push the price further down. What can happen if the price bounces from here? Well, it can move to the upside, fill up some fair value gaps area somewhere here, perhaps to retrace 50% of this move, and from then to see the decline to the downside. If the price keeps moving downwards, the level of support we will keep an eye on will be this one here, both of them. And if the price rallies, the key level of resistance will be this high here, but also the previous week's highs are right up there. Until last Wednesday, the Australian dollar was one of the strongest currencies among with the US dollar, but putting them together, the US dollar was much stronger. The proof is that the price made a higher high until last Wednesday, but by the end of the week and also during the non-farm payrolls, the price came down and tested the previous week's lows. Right now, the market is ranging. There is no consistent trend. So we have to wait for a clear break below this low, and if the price remains above this high, then the next key level of resistance will be the previous week's high. On the flip side, if the Australian dollar follows the weakness of the majors and the price closes below the support, then the market can move freely around 70 pips to the downside. Next one on the list is the US dollar versus the Japanese yen. Look at this one. The price closed above this swing high, connecting all these swing lows. We can apply an upward trend line, and we can see that the market created a new impulsive upward move. Measuring this distance from this swing low to that swing high and marking the 61.8% retracement, we see that this aligns pretty much perfectly with the broken swing high right up there. So we do expect it to occur, and the price doesn't stop right at this order block and keeps going down, then this can be a potential area where buyers are expected to step in and continue pushing the price to the upside. If the buyers fails to push the price further up, then this support here will be the critical level on the chart, because if the price closes below here, it will keep moving downwards until this support tested and also that one there. In case something happens and the Japanese yen becomes extremely strong or the US dollar extremely weak, Then we can see a follow through all the way down to 154.338. One of the most important charts for next week will be the chart of gold. The reason is that the price made an all-time high around 4,550, and now the market is about to enter into the 4-hour order block. This bearish order block is very significant because also it's the all-time high area. What you can see here is that the RSI during the move to the upside reached 81.5 and currently is around 66.4. So it's about 20 points lower right now. So we need to see the price moving through this resistance with significant momentum so it can lift the RSI to the upside to confirm that the buyers will be significantly stronger compared to the previous impulsive. Saying that, if the price breaks and closes above the all-time high, we're going to see a new all-time high, obviously. And the way to measure it is with the Fibonacci extension, which we can use the 1.618 extension to predict the next key level of resistance, which can be around 4,700 to 4,730. On the other hand, if the price rejected and moved downwards, the first key level of support will be the previous week's low around 4,400. And if the price keeps moving further down, then the origin of this previous impulsive upward move around 4,300 will be the next key level of support. The US oil has a significant potential to move to the upside, both because of the fundamentals, but also because of the technicals. The RSI on the weekly chart is accumulating bullish divergences, while the price remains above $55. The previous week's candlestick ended as a bullish engulfing, and that has bullish implications. If the price on this retracement won't stay above this order block and it closes below, then the next key level of support to keep an eye on for potential buying opportunities will be around 56.5. The price of Cooper last Tuesday made a new all-time high right here, but it had combined with negative divergences A class. That means the price was expected to retrace as it happened, but now we see that buyers were unable since last Thursday to push the price strongly to the upside. What can happen here is to see the transition from this uptrend to a downtrend, but the only way to confirm that is if the price breaks and closes below the previous week's low. Until that, the market has bullish implications and the level of resistance will be around 6.10. Last one is the chart of Bitcoin, and this has hidden bearish implications because the price on the weekly time frame looks like sellers are trying to push the price further down. After this accumulation area, we didn't see the buyers pushing the price strongly to the upside, and that's a market weakness. That indicates that sellers might want to take control. The only way to see the price declining here is if we see red candles closing below this upward trend line and pushing the price further down, at least to test this key level of support. So these are the major chart updates for the week. Trade safe, and I will catch you up in the next video.